Jumping over to the fixed strike dashboard, we look at fixed strike. We've got fixed strike across different indices, but we always home in on the S&P, given that that's the sort of broadest market. So what does this say to me? This says to me that in a market that was up 2.5% on the week, that realized, let's jump over quickly to the realized, 10-day realized was 13.35. Okay, so it's realizing 13 and a bit vol on the S&P. It's rallying 2.5%. And what are they doing to the fixed strike vol? They are clobbering the fixed strike vol. Okay, and you can see that by this sea of red here, which I did a really bad job of increasing the scale, which I should have done. But on the table, you'll see it's about a 1.5% drop in these upside volatility levels. And the levels that they're trading at now are on a 9 handle. Okay, so when it's realizing 13 on a 2.5% rally, and they're offering you the vol at 9, right? What do you think that means about street positioning? I'll give you a clue. It doesn't mean that the street is short vol. Okay, if the street was short vol and the market starts ripping higher, realizing 13.5 vol, and implied vol is only at 9 or 10, the street would buy back all of its volatility, right? Therefore, vol would not be down 1.5 vols on the week. Okay, the reason vol is down 1.5 vols on a week where you've had a decent move up is because people are long, right? And we're going into a long weekend where theta bills are going to be high because time decay will pass over the long weekend. These guys want to reduce their decay, which means they are long options, which are bleeding time decay. And the only way to reduce that is to sell some damn options. Okay. And when you sell options, you hit the implied volatility lower. That is what the fixed strike surface is telling us about street positioning in gamma. And anyone who tells you different doesn't know what the hell they're talking about. Okay. So if you see all these things from Goldman's and Stanley or whatever about street being mega short, utter rubbish, in my opinion. Okay. And the price action in vol is telling you that. All right. That's what these people need to realize. The problem is a lot of people do modeling and a lot of people just live and die by their models and think that, oh, they can't be wrong. The assumptions must be right. And I'm just going to blindly follow it. You've got to use a bit of common sense sometimes. And based on what I've just described to you, the common sense prevailing argument is the street is long now. Okay. Right. That's enough ranting from me.